In this video, I'm going to outline exactly what I would do step by step if I was starting investing again in 2022 with zero experience. I'll provide practical steps and the button clicks required to actually make an investment, as well as some important concepts around both investing and mindset. I know most of the people who watch my content have already started investing, but it's important sometimes to take a step back and realise that the hardest thing with investing often is getting started. It can seem intimidating and kind of overwhelming, but honestly, that doesn't need to be the case. And in today's video, we're going to show you that really getting started is quite simple. So maybe you're brand new to the space, or you've been hovering around for a while and you've just not taken that leap of faith yet. Or maybe you already started investing, but you feel like you kind of got off on the wrong foot and you want to start again. Well, this video is for you. Because this is an introduction video, my name's Damien. Most people call me Damo. For those of you who've been around long enough, they call me Carol, but that's a whole different story. I'm certainly not a financial advisor. Everything I'm about to go through today is not financial advice. It's just me saying what I would do if I was starting investing again in 2022. Let's go. There is a problem with investing.
What seems to be the officer problem?
And that is the way that it is portrayed in the media. So you can be forgiven as a beginner who's never invested for thinking that in order to get started, you need to be like this. But what if I told you that wasn't the case? What if I told you that investing doesn't need to be this? And instead, it can be this. We have a tendency as humans to make the tasks we perform sound and look more complicated to others, basically in an attempt to justify our own existence and to improve our own self-worth. Just take a scroll around LinkedIn for longer than 10 minutes and you'll see exactly what I mean. Darren says he's the lead distributor of tangible communication for a top 4 accountancy firm. Darren works in a post room. Kathy is head of waste management at a feline rehabilitation centre. Kathy shovels cat poop for a living. Damien says he's a financial influencer. Damien is a tit. My point is our perception of complexity and how hard something is to do is often brought about by a combination of a lack of understanding on our own part and the desire of those in the know to make themselves sound better, either for their own egos or in the case of investing, so they can charge you fees. The wealth management industry has approximately $89 trillion under management. Now that's a lot of fees, but I don't want to discredit the work of everyone in this space. I'm not trying to imply that everyone within finance is just out to collect fees. There's plenty of examples of professional investors doing amazing things. An example of such an individual, of an expert in the game, would be Warren Buffett.
And I don't know when to buy stocks, but I know whether to buy stocks.
This guy doesn't need a fancy job title. He has over 100 billion justifications that he is a good investor. During his career, he's averaged a rate of return of around 20% a year. Which is honestly outstanding and makes him one of the most consistent and successful investors of all time. Warren is a superstar in the investing game and is often quoted and looked to for advice. Luckily for us, he's very direct in his advice for the average Joe investor.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund.
He says that the majority of investors should just buy low-cost index funds that track the overall performance of the stock market and not try to be a superstar like him. We'll break down exactly what a low-cost index fund is in a minute, but the first thing I'm doing as a brand new investor starting off in 2022 is realising the following. Investing can be simple. You don't need to be a genius to do this. When you first approach investing, it's common to think, oh my God, I'm going to need to learn how to value businesses, how to dissect P&Ls, but in reality, that just really isn't the case. Let's relate this to food. Who is the best chef in the world? Heston Blumenthal?
Juicy.
Massimo Bottura? Gordon Ramsay? Your nan?
And that is the different spag bol.
Whoever you think it is, I bet we can all agree that you don't need to be a world-class chef in order to cook yourself a meal. You don't need to have a Michelin star in order to feed yourself. Cooking is a spectrum. At one end, there is microwave meals. At the other end, fine dining. Yeah, of course, some are more desirable than others, but all get the job done, which is to satisfy your hunger. Investing is the same. Warren Buffett is like the investing equivalent of Heston. He operates in a highly skilled space where he's trying to be the very best at what he does. But he is telling the average Joe to get the investing version of a ready meal because it will satisfy your needs and won't cost you much in the process. So what is the investing equivalent of a ready meal? Well, there's these investments called index funds, and they track whole marketplaces at once. Rather than trying to be a skilled investor, picking a business and valuing it, and trying to figure out which is going to be the next business to blow up, Michelin star investing, you can instead just bet on a whole marketplace at once, which is, ready meal investing. Different index funds track different markets, and a market could be the American stock market or the UK stock market or even the world stock market. It's simple, it requires little effort. It's kind of like a ready meal buffet all in one that you can just pick up off the shelf and consume. Warren Buffett Slightly confusing that his name's also Buffet, but let's just ignore that. Is trying to be a Michelin star chef, finessing up an investing meal that is world class, the best in the world. I, as a beginner investor looking to start out, do not need to be doing that. Now you might sit there and go, but ready meals suck. Well, in the investing world, these index fund ready meals are banging. The global stock market has returned on average 9% a year for 100 years. The top 500 businesses in America have returned 12% a year on average. So while that isn't as good as Warren Buffett's 20%, it's still an amazing return. You can dedicate your life to this, make it your core focus, and if you're one of the greatest who have ever done it, you might get 20% a year consistently. Or you can not even get up off the couch and in 5 minutes purchase an investment that has historically delivered 10 to 12% average a year. The key for me as a brand new investor is to realise that I don't need to be amazing at this to get started. Investing is a long old road, and like any skill, you can develop it over time. The most important thing is just to start and learn as you go. So as a brand new investor looking to start in 2022, I'm going to look to keep things real simple. I don't want to be looking to value businesses at this point. Instead, I want to bet on whole marketplaces using cheap index funds. So how do we do that? How do we actually start investing? Step 2, let's pick a platform. There are so many platforms offering so many different services that it can be kind of overwhelming to really narrow one down on who should I go with. It feels like a life or death decision almost. But in reality, as a beginner, keeping it simple, I can whittle this down quite a lot by just focusing on ones that offer the services that I need. As I begin my investing journey, I'm looking for 2 things. That's it. 1, that they offer low-cost index funds, and that in fact, the platform is low-cost overall in general. And 2, that they offer the ability for me to invest inside of an ISA or an individual savings account. In this video, I cover in full what ISAs are. It's the first video I ever made, so the production's a little bit ropey, but the information within it is still relevant. And at the end, I probably told the only good gag that I've ever told in the history of my YouTube channel. But in a nutshell, an ISA is just a type of account, and it acts like a bank account that you can keep your investments inside of. The ISA isn't the investment, it's like the pot that you cook your investment meal inside of. The reason beginners should use ISAs is because, let's say hypothetically, you end up with £11 million worth of investments after 30 years. Lucky you. If you come to sell those investments at that point, you could have a tax liability in the millions if you don't protect those investments. The ISA allows you to protect those investments, so no matter how big they get, you will never pay any tax on them ever. You can only put 20k into an ISA each year. But that money can grow as big as it likes. So let's say hypothetically that you put 20k into your ISA every single year. That means over 10 years you could put up to £200,000 into an ISA, but that money could be worth millions of pounds hypothetically. The 20k limit is how much money you put in, not how big it gets. Now, that limit resets every April. So you have until April to use your 20k allowance, otherwise it's like use it or lose it. Most people will never come close to hitting that 20k. It's not like you need to sit there and go, oh, well, I can only invest £1,000 a year, there's no point. The 20k is just the upper limit to stop millionaires piling, loads of money into ISAs and never paying any tax on investments. So if you start with an ISA in January this year, you've got until April to use that allowance, which most people won't, and then it resets again, you get another 20k from April. I personally would not make a single stocks and shares investment outside of an ISA in most cases unless I've already maxed out my 20k. Again, watch this video, but as a brand new investor starting in 2022, for me, an ISA would be a must. I think that some of the best overall platforms that offer the ability to buy cheap index funds and use an ISA include Freetrade, Trading 212, Vanguard, AJ Bell, Hargreaves Lansdown. There's loads that I could mention. I'll link a load of resources comparing a few providers below for you, as well as links directly to the ones that I've mentioned. It's also worth noting that Vanguard only offers index funds, which is great if that's all you want, but if you do wish to be able to also buy individual companies as well as index funds, so you want to own Tesla as well as buy into low-cost index funds, then Vanguard doesn't offer that service. And places like Hargreaves Lansdown are really expensive for buying individual companies. I think it's £7.50 for dealing fees. So again, bear that in mind. I also think it's important to point out that when shopping around on these platforms, you're going to see both index funds and ETFs or exchange traded funds. Now there are differences between the two, but for the purpose of this video, to keep it simple, I'm just going to refer to it all as index funds. And from the perspective of a new investor, I'm really not going to sweat about the differences between the two. So I've picked a platform, registered for the ISA with that platform so I don't need to worry about tax, and have some money in the account ready to invest. Now what?
Olive oil in.
No, Gordon, we're done with the cooking thing, mate. The next thing we're going to do is actually buy an index fund. I'll use examples and screenshots from Vanguard and Freetrade and 212, so you can see the differences. But in essence, the process is the same. This is more just generally showing you how things look, and below in the description, again, I've linked videos of full reviews of each platform so you can see how to buy index funds on each in more detail if that's what you want to do. But I guess the first question we need to ask ourselves is, which index fund do we buy? Now that's a personal decision, and that's only one that you can make. I can't make that decision for you, and don't listen to anyone on YouTube who's telling you to invest in specific investments. But the key thing is here, and what I think is important to clarify is, this isn't a final decision. You can change your mind later on down the road. The funds that you invest in today are likely not going to be the ones that you invest in 10 years, and that's okay. Try not to make this a massive mountain to climb, because I know what that analysis paralysis can do. It can mean that people just sit on the sidelines, not making a decision on what to invest in, and they miss out on, 12 months of investing potentially. I'll give you an example. The FTSE 100, or the top 100 companies in England, is up around 12% in the last year. The top 500 businesses in America, or the S&P 500, is up 26%, which is just incredible. Those who decided to invest in the FTSE 100 instead of the S&P 500 are likely kicking themselves that they missed out on, the extra gains. But no one's kicking themselves more than the people who didn't invest. It's like the Michelin star thing all over again. I see people anguishing on the sidelines all the time over what investment to make. They never make a decision, and the returns just kind of pass them by. You made 12% on your money, mate. That's excellent. Yes, it's not the top returning investment of the year with the S&P 500, but the aim of the game here isn't to be the best investor in the world, to be a Michelin star chef. It's just to provide a good rate of return on our cash above the rate of inflation. So the main thing here is to just make a decision. The most popular starting point is the S&P 500, which is the American market. I personally, though, like to invest in world-focused index funds, like VWRL, basically anything that looks to track the global stock market. As a global investor, I capture all markets, so I'm not kicking myself that the S&P rose 26% and the FTSE rose 12% because I invest in all of them. Now, depending on which platform you use to invest, they will have a different selection of funds. Not all platforms offer all funds. But if you go to the section that shows you the funds on offer, on Vanguard, that's here, Freetrade, you go here, and on 212, you can look over here. You can just see what's on offer. The popular ETF section on 212 and Freetrade is a good place to start. Clicking on a fund will then tell you what the fund is, and you can Google it for more information. These types of investments are designed to be set it and forget it. What that basically means is you invest your money, either a lump sum or hopefully you consistently invest on a monthly basis, and you just ride it out for the long term. Which brings me on to the next point. As a beginner, I need to understand that the best results for investing are achieved with a long-term approach. There's a very real chance that any money you put into investments can decrease in value in the short term, and you really need to be prepared for that point. The problem is, a lot of the investing chat online is fresh off the back of the last 12 months where everyone's done great, or even the last decade where everyone seems to have done really well.
Is money going up, but we only going up, bro.
Especially on YouTube, where a lot of the influencers have only ever known careers in a bull market. On screen is a breakdown of the annual returns for each year of the S&P 500, those top 500 businesses in America again. Now, there's a lot more green than red, which is excellent, but there is definitely some red on there. If you started in 2008, you would have lost 38% that year. Or if you started in 2000, you wouldn't have seen a green year for 3 years. As a beginner, I need a strong stomach and to be able to continuously invest in the face of these sorts of losses.
The show goes on!
Because coming back to this chart again, those periods of decline have always been followed by good times. The facts are simple. Pick any day in the stock market and invest. You typically have a 50-50 chance on whether you're going to make money or not. But if you go long term, so if you pick any day in the last 50 years and you invest for longer than 13 years, your chances of making money are over 90%. Invest in any 20-year period, so invest for 20 years or longer in any period in the last 50 years, and you will never have lost money. Time with investing is as big a factor in relation to your performance as the things you invest in and the amount that you put into them. I honestly can't stress enough how much your investing success depends on your ability to give your own head a wobble when things aren't going your way. Red days, weeks, months, and even years are all part of the process. It isn't a straight line up. You need to be able to take that. I mean, if you want some practice, you could always put some money into crypto and that'll make you feel a lot better about the ebbs and flows of the stock markets. You'll feel practically bulletproof after seeing your crypto portfolio drop 50% in a day. So the TLDR of wanting to start investing in 2022 is don't overcomplicate it. So if I'm starting investing in 2022, I'm going to open an account with a discounted broker and use an ISA to protect my investments from tax. Inside of that ISA, I'm going to stick low-cost index funds. My personal preference would be a world-focused index fund, but many people use things like the S&P 500, which is the top 500 companies in America. Index funds have a track record for providing excellent returns for investors over the long term, and they're designed to be easy to use, to be set it and forget it. You don't need any technical knowledge on how to value a business to invest in index funds. I'm also going to remind myself of one point. Investing is like any skill. There is loads to learn. More than I could ever discuss in this one video. There's a long way between complete beginner and the world's best, but that doesn't mean you can't start today and get better over time. If you want further videos on this topic, then this playlist right here is a collection of videos that I've made that I think are aimed at the beginner and helping them get started and wrap their head around this world of investing. Use them as a point of research to form your own opinion and enjoy.
Okay.